The promise everyone wants to believe. What if you could take a small amount of money and grow it consistently using AI? No expert knowledge, no years of experience, no emotional decisions, just data, algorithms, and smart predictions working for you. That's the promise being sold everywhere right now. Let AI invest for you. Smarter decisions, better returns. Turn small money into something bigger. It sounds powerful, almost too powerful, so I decided to test it. Not with a huge portfolio, not with unlimited resources, but with something real and relatable, a small investment, because that's where most people start. And what I wanted to find out was simple. Can AI actually grow small money in the real world? Or is the expectation bigger than the reality? What happened over the next few weeks didn't just challenge the hype, it completely changed how I see AI and investing. The setup: small money, real conditions. To make this experiment realistic, I kept everything simple. A small, starting amount. Something an average person could afford to invest without taking major financial risk. No special advantages, no insider information, and no high-frequency trading systems. Just AI. In the market, I used tools like ChatGPT to generate strategies and decision frameworks, along with platforms like TradingView to analyze market data and execute decisions. The goal wasn't to win big. It was to see whether AI could consistently grow a small investment under normal conditions, and most importantly, I committed to following the AI's guidance even when it felt slow, boring, or uncertain, because that's where the real test begins. The first reality: small money moves slowly. One of the biggest misconceptions about investing is speed. People expect fast results, quick gains, visible growth, noticeable changes. But when you're working with a small amount of money, everything moves slower. Even when AI made correct decisions, the returns felt small. A good trade didn't double the investment. It increased it slightly, and that's where expectations starts to clash with reality. AI can optimize decisions, but it cannot change the scale of your capital. This was the first important realization. AI can improve efficiency, but it doesn't create instant growth. Small investments require time, patience, and consistency, and no algorithm can shortcut that. The role of volatility. Growth isn't a straight line. As the experiment continued, the second reality became clear. Growth is not smooth, even with AI making decisions. The portfolio didn't move in a straight line. There were ups and downs, gains followed by pullbacks, and moments where progress seemed to disappear. This is volatility, and AI doesn't eliminate it. In fact, sometimes it exposes it more clearly. AI would enter positions based on probability, not certainty. And while many decisions were logical, not all of them worked immediately. Some trades went into profit. Some stayed flat. Some went into temporary loss. And emotionally, that can be difficult. Because even when the strategy is sound, the experience feels uncertain. This is where many people lose confidence, not because the system is wrong, but because the journey isn't comfortable. One of the most interesting parts of the experiment was this. AI often made good decisions. It avoided obvious mistakes. It didn't chase hype. It followed structured logic. But even then, results were not always impressive. Why? Because markets don't reward every correct decision immediately. Timing matters. External factors matter. Broader trends matter. At AI can increase the probability of success, but it cannot guarantee outcomes. This creates a gap between expectation and reality. People expect AI to deliver visible results quickly, but in reality, it often delivers better decisions, not immediate rewards. The risk factor. Small capital. Big exposure. Another challenge with small investments is risk management with limited capital. Every decision carries more weight. A small loss becomes noticeable. A wrong move feels significant. AI tries to manage this by spreading risk avoiding extreme positions, and focusing on probability. But here's the limitation: with a small portfolio, diversification is limited. You can't spread your investment across dozens of assets effectively, which means risk cannot be eliminated, only managed. And even with AI, there were moments where a single decision had a noticeable impact. This highlights an important truth: AI reduces risk, but it cannot remove it. As the experiment progressed, the biggest challenge wasn't technical, it was psychological. Waiting following AI required patience. It didn't make constant trades. It didn't chase every opportunity. It often recommended doing nothing, which felt counterintuitive. Doing nothing feels unproductive. But in investing, it's often the right move. This is where AI shows its strength. It doesn't act out of boredom or fear of missing out. It waits. And that's something most humans struggle with. The turning point. When consistency starts showing around the later stage of the experiment, something changed. The results started becoming more visible. Not dramatically, but steadily. Small gains began to accumulate. Better decisions started compounding. Mistakes were minimized over time. This is where the real power of AI appeared. Not in explosive growth, but in consistency. And consistency, over time, becomes powerful. The final outcome: expectation versus reality. At the end of the experiment, I looked at everything. The numbers, the decisions, the process, and here's the honest result. Yes, the investment grew, but not in a life-changing way. It didn't multiply overnight. It didn't create massive returns. What it did do was improve the process. AI helped make better decisions. It reduced emotional mistakes. It created structure and discipline, but it didn't break the fundamental rules of investing. The truth most people don't want to hear. Here's the reality. AI is not a shortcut to wealth. It's a tool, a powerful one. But still a tool, it cannot turn small money into big money instantly. It cannot eliminate risk. It cannot guarantee profits. What it can do is improve how you invest, and that difference matters. This experiment started with a simple question: can AI grow a small investment? The answer is yes. But the more important answer is this: it grows it realistically, not through hype, not through shortcuts, but through discipline, consistency, and better decision-making. And that may not sound exciting, but it's what actually works. If you found this honest breakdown helpful, like the video. Subscribe for more real AI experiments. Share this with someone starting their investing journey and comment below. Do you think AI makes investing easier? Or just more structured? Because the truth is, AI doesn't change the game. It just helps you play it better.